Hello traders, welcome back to my channel. Today we are looking at the absolute easiest trend trading strategy I have ever come across. Hands down, super simple to implement. A few things right off the bat. Obviously, just because this is a very easy strategy to learn doesn't mean it's going to work every single time. You still need to understand the fundamentals of trading. So, it's not a get rich quick play by any stretch of the imagination. Two, please subscribe to my channel if you haven't already, if you want to see more videos like this one. I try to keep things really short, sweet, and to the point here, just give you kind of the good stuff. And that's pretty much it. I think I had a 3 somewhere along the line, but I've lost it in my head. Pretty much, guys, to this strategy, there are 3 things you need to understand, okay? How to plot an EMA, it's pretty basic. Basic supply and demand, or support resistance zones, however you plot, structure, I guess I'll call it. But support and resistance, I guess, would be the basis of that. And we will talk about that a little bit more. And how to place a stop loss. Okay. And that's just, with every strategy, but we are going to use the ATR to place a strategy in this video. So what I'm going to do, if you're not super comfortable with the ATR method of placing a stop loss, I'll link the video to that in the description, because if I go through, that in a whole lot of detail, this is going to be a really long video, and I try to keep my videos, pretty short and, like I said, to the point. So we are starting on the daily time frame, okay? And I am looking at the Aussie US dollar right now, and this line I have here is the 200 EMA. Now, I'm sure a lot of you know how to plot an EMA, but I am going to go in and show people how, just in case you don't know how to. So you just literally go in here and search. It just actually came up because it's a favorite of mine, but exponential moving average. You click on it, okay, and it's going to automatically plot a line. It automatically plots the 9. So to change that, you go to settings and input whichever EMA you want to use, okay? So we're using the 200. So that's the EMA you need to place. You don't need to, I actually like the dark blue. I think it's really easy to spot on my gray background, but of course you can change the color if you'd like. The next thing you're going to want to do is switch to the daily time frame. So yeah, I just spoke about that. I told you that's how I'm going to start. I'm not even going to look at the weekly. I'm actually going to start right at the daily. And I do want to mention to you guys, okay, so since we're using the daily time frame, some of you are probably thinking, and a lot of you ask me this, when we're using the daily time frame, can you enter day trades? So you can, but there are going to be less opportunities, and you're going to see why as we go through the strategy. But there will be definitely less opportunities for you as a day trader, but you can find some really high probability setups this way as a day trader, if that makes sense. So once we have the EMA plotted, basically what we're going to look at is any price action below this 200 EMA, okay, we're considering to be in a downtrend. All right, any price action. So what's going to be really important is looking for a breakout candle or a break of that line. That's going to give us our entry, and that's ultimately the foundation of this strategy, okay? And you guys might have heard of this strategy as something else. I don't really call it anything fancy. I just call it really freaking easy. So that's how we're going to look at it. Anything above that line, then we're in an uptrend, right? So anything above this line, we're considered to be in an uptrend. So we're really trending. Now you're going to notice we've been strongly trending downward with the Aussie US dollar, and a lot of our pairs are really respecting the 200 EMA right now, and that's because we have a highly trending market. We have so many things on the go with fundamentals, with coronavirus and other various events throughout the world, that we're really seeing that, true trend. So it's a really good strategy to try to adapt right now. And I always tell people that as a trader, you need to learn to adapt to market conditions, right? So the market's always going to be changing as fundamentals change, and we need to then adapt our strategies and to continue learning and changing where we need to in order to maximize our earning potential. So that's the basis of it, guys. When you see a break above, we're looking for buys. When you see a break below, we're looking for sells. And that's the basis of it, right? So obviously, where are we looking for our entry? Well, we're looking here. We're looking here. We're looking here. We're looking here. We're looking here when it comes up to that line. But obviously, we're not going to look, enter a trade based on rejection of this line alone. I wouldn't do that. You might do that. That's totally fine. That's not enough for me because I don't consider the EMA structure. Some people do. I don't. I would need to have a zone. So what I would do is as price approaches this line. So it approached right here, correct? So what I'm going to do then is see if I have a zone or support and resistance from that's probably what a lot of you are used to using. You can use zones, key level, support and resistance lines, whichever you prefer. I use zones though. And right here we have a resistance, right? So we have a resistance that was respected as support, and over here resistance as well. If I drag this over here, whoops, we do have, it is the same area, right? So this area then, that's my confirmation that this is an area I will look to sell at. And that's really it, guys. And you can, like I said, you want to use a line, even easier. So I'll give you an example with a resistance line. So price approaches here. I'm going to plot a line there. Easy as that, and go back and see if it has been respected as resistance, and it obviously has. Now, this would definitely be a stronger one, but we've seen it respected as resistance a few times, especially if you were to zone that in and draw a box around it to give us a little bit more wiggle room. It's definitely been respected. Okay, let me get rid of these dots because they're going to drive me nuts. So that's the second thing you want to look at. You want to make sure that price is also approaching your structure, okay? If you want to use the EMA, again, if that's your vibe, if you want to consider the EMA, strong enough or to be structured, go right ahead. Definitely don't hate on that. It's just I personally need that second confirmation that it's at a zone or key level support resistance, okay? So that's that. Next, what I'm going to do is, of course, we need to ensure, guys, that we see rejection. So what I would do at that point is go to the lower time frame, just the 4 hour, and look and see what's happening at that line. Okay. A lot of you too will say, sometimes these EMAs are lagging or EMAs can be lagging. And that's true, you guys, but pretty much every indicator that you lose is going to be lagging to some capacity. This still works very well. Okay. And that's why I always use support and resistance along with it. So because then, you're going to have that double confirmation. Okay. So that's the very reason why I wouldn't worry about it lagging. Every indicator lags. So if you're not going to use EMAs because you think they're lagging, you pretty much shouldn't use any indicator. So what we're going to look for on the 4 hour chart, I don't know if this is actually the right spot, but we would be looking for a candle like this one, right? A nice long wick. So this would be example. This would be an example. This would be an example. And of course we have, hammers, inverted hammers. It would look like this. Okay. I'm really bad at drawing these on the spot. That's not too bad. A doji, your various rejection candles. So look out for all of those candles on the 4 hour time frame. Okay, that's going to be the next thing I look for. And then last, and you guys are probably expecting me to say this, or I'm going to say this, we're going to look for confirmation. And confirmation I would look for on the 4 hour because we're entering on the daily, or because the strategy is based on the daily, sorry. And all I need to see on the 4 hour is a nice long bodied candle like this one. So once that's finished forming, I'm entering. Okay. So this would be where I enter on that third candle. I'm going to give you another example. This would be, this here would be my confirmation candle, and I would enter at the next one. Okay. Let's do one more. This would be, I don't know why I grabbed the pencil. This would be my confirmation candle, nice long body candle. This would be my entry point. All right. And obviously, guys, this isn't the 200 EMA. This is the 200 EMA, but This is going to look different than what it looks like on the daily, of course, right? So it's not in the same spot. So just make sure you're marking the area on your chart that you're going to look for your rejection on. That's all I wanted to say about that. So that's how I would, and that's very simple, guys. It's pretty much the same thing I do with every pair that I enter. That's how I look for confirmation. Super, super easy. And that's really it. And then I'm entered the trade. Where do I take profit? I trade zone to zone. No matter what strategy I trade, I'm always trading zone to zone, meaning if I have a zone here, and guys, a zone is just basically an area of support or resistance. That's all it really is, okay? It's just that instead of using a line, I use a zone or a box, okay? A rectangle, I should say. So if I entered my trade, let's say we entered here, okay, at this zone, this resistance zone, I would be looking to take profits around here. Oops, I keep doing this. I'm not being a very good teacher today. Okay, this would be my next zone, right? So that's where I would look to take at least partial profits. And then, I would either secure profits, okay, depending on, how things are looking fundamentally wise, or I could say, nope, I want to take it down to this lower zone. Now, obviously, I'm drawing zones around current price, and I wouldn't know this looking at the chart because this wouldn't have played out yet, right? I'm drawing them in kind of the easy way. But if we go back, so if we extend this rectangle, and this is how you extend a rectangle, by the way, you double click, go to settings, go to coordinates, just add a bunch of zeros. So we need, and just remove the negative sign on one of them. If we go back, we can see that this area has been respected before. So this would definitely be a zone. And what you can also do, here, let me do it this way to make it more realistic. I probably shouldn't have drawn them over here because this wouldn't have happened yet. So let's go back and say, okay, this is a previous area of support. Oops, right here, okay. It's the daily time frame, so our boxes are going to be a little bit thicker. And then we're going to extend this. So all I did was I went back to, previous price action. You want to go back to the most recent price action too. So, I'm going to look for a recent support. And then we can go back and say, okay, this will be another one here, right? And then we're going to extend this. And these are going to give us our targets because we know price has respected these areas in the past. That's why. And that's how I always plot my targets. What I would do is I would come down, I'd take my partial profits here. Okay, I know I had it up higher, I think, the first time I drew it. But I really should have drawn it based on previous price action. You could technically take them here too, because this is definitely another area, but this one seems to be stronger, okay? Price is liking this area better. And then this would be my target too. So I'd secure profits, trail my stop loss here, and try to ride down to this area, which would have worked out in this case. And that's how I set my profits. Super easy. Now, let's look real quick at how I would set my stop loss with this strategy. Lately, I've been using the ATR method. I am going to link it below because, again, I'm not going to go too in depth on it just because it's a whole different topic and we would be here all day because I'd start rambling and trying to give you a bunch of examples. So we're going to go to indicators. It is an indicator. And we're going to plot, it's called the average true range, okay? And it's basically telling you, the average range of the candlesticks over a period of time, okay? So it's not one of these indicators that's attempting to kind of read too much into the market. It's just giving you a very basic analysis of price action or important aspects of price action that we can then use to place our stop loss. It's basically telling us that, okay, right now on the daily time frame, this is what our candlesticks are averaging in range. Range meaning they're open to their close. Okay, and I did that in the wrong movement. But, from open to close, how many pips, okay? How many pips, the distance between the open and close. And it's giving us an average of that. So what we're going to do, and again, I'm going to link it below if you're not clear. So don't Don't freak out about that. So let's say we entered, I'm just going to use this as an example, guys. Okay, so what I'm going to do is drag my cursor over our entry area, and you might not be able to see the numbers, but if you look to the right, okay, what you'll see is that it says 0.00637. Okay, now this is giving you the value in points, so you do need to convert it to get your pip value, which I know that can seem a little confusing, but basically, guys, it's 63.7. And the way I always explain how to know this, because some pairs are different, so some pairs you'd need to move the decimal over a little. I think it's one more, depending on obviously if it's a pair, an index, a yen pair. The easiest thing you can do to know, okay, is it 63.7 or is it 637? Easiest thing to do, grab your date, price, and range tool. Okay, it looks like this. It has little arrows. It's over in the last section on your toolbar on the side. I have it up in my favorites. And what you're going to do is like literally box the candle in, a daily candle, and look at how many pips it is. So this last value here is going to tell you the pip value, and it's 97. So obviously you know then that it's not 637. The average range of the candles isn't going to be 637 if we've got one that's at 93, right? Like that just wouldn't make sense. So you know it's going to be the 61. So again, and now I've moved it, so it's saying 68. So that's even easier. So what we're going to do to use the ATR to find our stop is go 62, because that's the value it gave us. So it's saying this is the average that our candlesticks were moving, okay, on the daily time frame for the Aussie US dollar. We're going to take that number and multiply it by 2, okay? And then what we're going to do is take that same date, price, and range tool and count 124 pips above our entry. So remember what I said, I would wait for this 4-hour candle to close. Now this is daily. I'm not going back to the 4-hour now. Well, let's say I entered around here. So I'm going to go up 100 and 24 pips or close, and this is going to be my stop loss. Okay. That's going to be my stop loss value wherever that line there is. That really beautiful line. The reason we do that is because this value is telling us this is on average how far our candlesticks are moving right now. So it's an extremely powerful way to set your stop loss in a trending market, okay, because it's literally giving you the room you need. It's telling you, okay, price is moving on average this much. So give yourself an extra candle of wiggle room in case of, news release that would kick you out, or just standard volatility. You want to give yourself that wiggle room, right, in the market. And that's a really, really great way to set it. So that's how I would recommend doing it. That's just how I personally do it. Lately, that's all I've been doing, and it's just extremely effective. I'll be honest, a huge weakness of mine that I have been working on this past year is that I was setting my stops too tight. So I was always looking for a sniper entry, and that was fine when I was trading full time and that's all I was doing. But I had to adjust my trading style to, accommodate my business, of course. And with the new style of trading that I was doing, where I wasn't actively managing my trades, so I was away from my trades a lot of the time, that sniper entry method just was not working for me anymore. Because I couldn't, I wasn't there to analyze momentum. I wasn't constantly looking at news updates. I wasn't in front of the computer. So this method really allowed me to kind of take my swing trading and my long-term trading to a whole new level. So I highly recommend it. I'm sorry this video is a little bit long. Hopefully you stuck around. Hopefully you like it. Let me know in the comments below if you watched the whole thing. If you like this video and you like videos like this, I am trying to upload a lot more to my channel. So definitely subscribe, please, if you haven't already. I know I told you that before. And I think there's a bell button if you want to be notified when I upload, which should be every day, every other day. That's what I'm trying my best to do this week. Thanks so much for watching, and I'll see you in the next video.